Thank you so much, everybody, for taking a listen or a watch to this quick edition of um, Brett's podcast. Clearly, I don't have a thought out name for this yet, Avery, as you can hear, but I am here with a colleague. I will call him a friend as well, and a current client of ours here at Sense Financial. We're not here to talk about Sense Financial. We're here to talk about Avery and his journey, where he's come from and where he's headed, and kind of maybe some of the in between. And that is the goal of this, to help people kind of relate to him and what he's done, and maybe consider following in his footsteps or not. Maybe there's some things that Avery will share with us today that people will be like, man, I'm glad that he made that mistake for me. But I don't know. Maybe your life's been kind of perfect from the start. I'm not sure.
Nope, nope. We all got those ups and downs. So,
Anyway, well, cool. Thank you so much for being willing to do this and being here with us. First off, I guess just give us kind of the short version of your background, like where'd you come from, how'd you get started, and what you do now.
yeah, absolutely. So, kind of quickly, my professional background, I graduated from BYU, Idaho. Spent a couple of years. I studied agriculture business. Spent a couple of years actually working on a cattle ranch in Florida, and then I had an opportunity to come kind of use more of the business side of that degree and working for a bank, Idaho Ag Credit here in Idaho. So I was writing essentially a loan officer for most of my time there. Writing farm and ranch loans. And then about a little over 4 years ago, I started doing hard money loans on the side. And then it's been just close to 2 years now that I'm doing that full time. So that's kind of quick and dirty of kind of how I got to where I am.
Oh, I love it, man. Cattle rancher, huh?
Yeah. Yeah,
Cool.
I love the ag industry, and I kind of thought that would be my career is like being a ranch manager or something. But um, I like numbers and finance too, and we wanted to get to Idaho, so it all kind of came together, and it's been good.
So did you ever ride bulls, like like a bull rider? Did you ever do that?
No, I'm not that cool of a cowboy. Like,
Okay.
we would like get horseback every day and kind of move cattle that way and stuff, but I didn't really grow up doing that kind of stuff. I just got involved in FFA, if you're familiar with that program, and
Yeah.
kind of had an itch to get in the ag industry.
Nice. Very cool. Okay. So it was about 2 years ago, if I heard you correctly, that you started investing kind of seriously with hard money loans.
Yeah, I would say, I mean, like 4 years ago, a partner and I started raising some, finding some partners to essentially raise capital with us to fund some loans. So we started really offering these hard money loans and raising capital about 4 years ago, and then just got busier and busier. That 2 years, I took that leap to leave my W-2 job.
Yeah. And you're not looking back, right?
Not looking back. Nope.
Yeah. 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 That's cool. Well, you did it the right way. Some people cold turkey that transition. I don't recommend that. Speaking from experience, you were able to do it kind of wisely and get, some income to offset your leaving the other job first, right? Before you just take that leap.
Yeah, yeah, exactly. Well, I mean, and I get some businesses just don't really allow for that. You kind of got to jump in, you know,
Full time.
cold turkey from the start. But
Sure.
thankfully, I was able to kind of balance both, and then got to a point where it was like too busy. It's like one of these has got to go, and I'm going to bet on myself more than the other. So
There
I'm
you go.
pretty cautious too. So, used to having a wage, it's takes some time to cut that umbilical cord and trust yourself.
Yeah.
But yeah, like I said, I haven't looked back.
Nice. Nice. Are you a numbers guy? Is that like, do you love numbers?
I do, yeah. Like I can get nerdy about like putting a spreadsheet together and like
Yeah.
really running the numbers. And so yeah, definitely love the numbers.
Is that, well, I should say, how important is that to doing hard money loans? Could somebody who like is not a big fan of spreadsheets and numbers, like be successful at hard money loans and just kind of look at the wave tops instead of jumping into the in between?
I think as long as you can, um, I think there's a couple sides of it. Like, I think if you're lending your own money, um, maybe you don't need to be as detailed on those numbers because if you're taking that stewardship of any investor's money, I think you definitely need to be able to track everything very closely and be very detailed oriented to follow that. Um, and if you're lending your own too, and on both sides, like as long as you have some dedication to like be able to run those numbers and make sure deals are good and not just kind of, yeah, someone wants to borrow money, heck yeah, that's a
Yeah.
good interest rate, send it out the door. That definitely is important to be able to kind of analyze a deal and run those numbers. I don't think you have to be a total nerd about it, but as long as you have some interest in analyzing things and running numbers, it's important.
Hmm. Yeah, I mean, and there's so many different ways to structure a PML, a private money loan, or a hard money loan, if you will. And getting into the numbers is going to help you get creative, I would think, with some of the way you structure the terms, right?
Yeah, for sure. If you can, know how to analyze those deals and run numbers and see different scenarios, that helps you figure out how to structure it, how you can keep yourself protected, but then also, make a deal that people, that can close a deal, that you can figure out a way to put the loans together. And so yeah, definitely it is helpful to do that. And borrowers appreciate it too when you can really kind of think through with them and help them strategize.
Are you like no way stock market, all alternative investing like private money loans and such, or do you kind of do a combination of both?
We do a combination of both. Like I definitely see the value in that, just like, dollar cost averaging, investing in the stock market, index funds. I'm currently really heavy, obviously, into hard money because my business and I'm growing my nest egg in that. But that being said, I still do have some funds invested in the stock market. Um, and I think I always will. I think diversity is good,
Hmm.
but I think, if you look at people, if you want to leave like your day job and start a business, I think you really do have to niche down on one thing. But if you're just like, say you're a banker, a lawyer, whatever your day job is, teacher, whatever, um, then I think, diversifying stock market and then some other alternative investments and things is a good approach. And, make money where you can make it and then just invest it across the board. But I definitely like the alternative investments and kind of the potential and control they give.
Sure. Yeah, no doubt. No doubt. Plus, I think a lot of people like the alternative side of things because there's two people are signing on the dotted line, um, as opposed to putting your money in an index fund. And if there's an issue or a default, it's kind of clearly laid out as to what's going to happen, and there's a hard asset to go after, so to speak, to make you, or even if you're stewarding somebody else's money, to make them whole again, right? And potentially, and some, if that foreclosure works out in a more favorable way, I suppose. Although I would imagine your goal is not to loan to own. You're you just want to be the lender primarily. Is that right?
Yeah, that's right. And we want to lend money and continue to lend money, so we're not looking to take the properties back. But on that point, yeah, if you look at the stock market and you forecast like, hey, I'm going to get a 10% annualized return, or I can maybe eight, whatever it is, your financial advisor might be using, and how conservative you are on those investments. Well, that's going to go really up some years, down really some years. But if you can consistently lend money at, say 12%, 10%, 14%, whatever it is, a double digit return, and like, that's not going to go up and down as long as you structure it right. And just like you said, if there's an asset behind it and it protects it, then, you can pretty much count on always getting that return. So and that's why I am heavy into it too. Like I probably had when I left my job, that's where I started with Sense Financial is I took my 401k and put it in a solo 401k. And, let's say maybe it was around 100 or $200,000 or so. Like actually about all of that now I am lending out in private notes, real estate secured loans in a first lien position, just because, I can control it and I know what that return is going to be. And I think I can kind of grow it more consistently that way.
Yeah.
And then eventually, have a little bit going on in the stock market. But
I tell your story often, by the way,
yeah,
because it's such a cool story. You left a W. I don't really talk about you kind of firing your employer. I don't talk about that part of it.
yeah,
But I'm not sure I knew all that until this conversation. But you left your W-2 job to do lending full time and live off of that, which you were already doing a blend of for a little while. And then you used your knowledge of private money lending, you used your self employment as a hard money lender to sponsor a solo 401k plan. You rolled the 401k into the 401k, the solo 401k, and you're using your knowledge of hard money lending that you built up over the previous couple, 3 years, whatever it was, to also use for investing and growing your nest egg, as you put it, your solo 401k funds for your retirement. And so it's all this reciprocal thing, and it's all done above board and third party and according to the rules of the IRS. So it's all cool. It's all good. But I
yeah,
just love your story because it's like you didn't add anything to your plate per se as far as knowledge goes. Not that you're not learning, because we all learn every day, but you're using skills you already developed to grow your solo 401k. And that could be it doesn't have to be solo 401k. That just happens to be your story. And so,
sure.
yeah, I talk about you all the time when people are asking me like, well, how do I do this? And so anyway, I hope that's
Yeah,
okay.
absolutely. No, appreciate it. Yeah, I mean, I feel, pretty average guy, but appreciate kind of opportunities I've had. And yeah, I mean, it's a powerful thing. And I'm trying because I want to hit financial independence. I don't want to have to wait till 59 and a half to start living off of this nest egg. So I'm trying to grow, assets outside of this 401k, but then also to have these tax benefited accounts inside the 401k. So if I have this deal flow of hard money loans that I can do in my normal business, well, as my 401k funds are available, I can, instead of doing those in my business, I can push one over and do it just inside my 401k, separate from my business. And just like you said, keeping all those requirements met, and it can help grow that nest egg while I continue to grow my business. So.
Yeah. Okay. Rewind the clock, maybe, I don't know, over the last 4 years, or even when you're just getting started in this, what is maybe a thing or two that you would definitely do differently?
Yeah, it's a good question. I think, outside of hard money, I think, you know, 4+ years ago, I was trying to get in the investing world. I was trying to find some rentals. This was before I even really knew what hard money was. And or trying to flip a house and just trying to, listening to Bigger Pockets and trying to figure out, how I could build wealth outside of just my standard retirement account. Um, and I think looking back, we had some opportunities to do like, house hack or buy some small multifamily kind of as the market was starting to crank up. And we were just like, we got too nervous or analysis paralysis and just really looking at those numbers. So looking back, like, I think everything's kind of played out fine, but I would take action quicker. It's easy to get stuck just analyzing things, but I think you need to have some knowledge to move forward, but you don't need to know everything and, take reasonable steps, reasonable risk. Um, so that's what I would do is probably take some more action quicker.
Do you hear that, all you engineers out there considering investing?
Yeah.
I'm
Yeah, we
I'm
want to be
only
able to forecast everything and
and I'm only teasing, of course, but yeah, invest and wait. Don't wait to invest. as kind of a general rule, obviously not across the board because you need to make informed, wise decisions, as you mentioned, good stewardship over whether it's your 401k funds, which, let's be clear, you are not your 401k and your 401k is not you. So you are stewarding somebody else's money. You're the fiduciary of that plan at the end of the day. And you and I think any investor should treat their own money in the very same way. I mean, maybe we take a little extra care over somebody else's money than we do our own, which seems to me it's not necessarily backwards, but they should at least be equal.
Yeah, yeah, I agree.
So
Yeah.
all right, good stuff. Okay, a must read book or two if you had to recommend. It doesn't have to be like about hard money lending, by the way, just whatever.
Sure. Yeah, I think for like getting started in your investing journal, like that classic, just Rich Dad Poor Dad, I mean, that whole concept, if you can understand like buying assets, right? I love balance sheets and I think everyone should track their net worth and learn how balance sheets and income statements work. Um, but like I think that's such an important one. And then, I would say like the seven habits of highly effective people. Had to think through the title there, but
Covey.
it's just super, super good. Yep, with Covey. That's a super solid book that, I should refer back to some more as well.
Yeah, likewise.
Yeah.
Actually, even Rich Dad Poor Dad is. I mean, it's basic in nature, but it's
Mhm.
probably a good every few year kind of peruse through type of book.
Yeah, yeah, it probably is. We should probably look at that more often for sure.
I just broke out Cash Flow, the game, with my boys the other day, and I don't have the children's version. They're 13 and 11, and so I just broke out the whole thing, and it was a little much for them right now, but
Mhm.
we got into it. They were a little bored. I tried to sell them because they like Monopoly, and I'm like, this is just
Yeah.
Monopoly on steroids. Like, and they're like, why do I have to write so much?
Well, that's
Anyway,
awesome. Yeah, I finally got that game just this last Christmas, and I made my
uh,
wife and brother pay with me or play with me. But
oh, nice.
yeah, I was gonna ask if you had the kids version because yeah, my kids are younger too. I'm like thinking about getting that. See if I can get them start playing, thinking about it.
Yeah, yeah, absolutely, absolutely. Cool, man. All right, anything
I
else you want to share? Go ahead.
Yeah, I would. I just talking about kind of lessons learned and stuff too. I've been reminded as I have a borrower I'm kind of working with right now who we're in a first lien position. I feel like we're well secured. I think he's getting stretched a little bit thin. We'll probably be navigating some potential defaults, but I've had people contact me that have lent him money, like in junior lien positions, so like second, third. And this lady sounded like she had quite a bit of funds that she had available to invest, but like talking through like the details of how she lent the money and kind of her knowledge of the vernacular, like seemed like she wasn't super informed on it.
Mm,
And um, so, I think with lending, it's kind of like buying, um, they say you make your money when you buy, right? In real estate, it's like when I at the bank, like our chief credit officer would say, you collect your loan when you write it. So like when you make that loan, like you set yourself up to be able to collect that loan or not.
mm,
Um, and so lending like in junior lien positions and things like I'm not saying don't ever do it, but be very astute on what you do. And lending's a great way to do it. It is very simple, but just learn the basics of how to protect yourself. Don't just throw money out to the first person that asks you for it and says you'll have collateral. You want to make sure what is that collateral's value and all that. So anyways, that's was kind of she's going to probably lose hopefully
mm,
regain some of her principal, but I think she's going to take a pretty good haircut. Um,
mm.
but yeah, that would be kind of a lesson I learned just from seeing others experience too is just, write your loans well. It doesn't need to be complicated, but just make sure you know what your value is.
Yeah, that's great advice. Great advice. And even to take it a step further, um, go through a broker of some sort, right? I mean, they do all the underwriting, the appraisal, everything associated with it, and you get the whole package. It's up to you whether you want to wire the money for the closing or not. And in often case, they'll service the loan as well, which is another aspect of it. But you typically, yeah, if you're going to go second position or beyond, you definitely want there to be plenty of equity in case there's a foreclosure issue. So yeah, that's
For
a
sure.
huge thing. I hope she's able to get most of her principal back at least. So yeah.
Yeah, I hope so too. And I think if it's something that's out of your wheelhouse, like, I invest in some real estate syndications and partner with some people on different things like that are kind of outside of my expertise. So, partnering with someone like myself in your area that might be doing hard money loans or working with a broker or a debt fund that you've looked through and trust could be good ways to get into investing in debt if you don't want to take on the responsibility of doing it directly.
Yeah. Oh, there's plenty of lenders who will JV with somebody to teach them and be compensated for it at the same time without the person having to come out of pocket to pay some kind of coaching fee or something like that. So there's
For sure.
all kinds of ideas out there. But yeah. All right. Avery, anything else you want to share?
No, I think that kind of wraps it up. Thanks, Brett. It was a good conversation.
Yeah, I appreciate it. Always talking to you. It's fun, and thanks again for taking your time today. And look forward to continuing to do these every now and then with different people. So keep an eye out. This will be on our YouTube channel and probably LinkedIn, and we'll see wherever else. So thanks so much.
Absolutely.